Are you only getting paid once for every hour you work? If so, you're stuck in what's called linear income. And it's one of the biggest traps high income earners, doctors, dentists, attorneys, they actually fall into. Now, I get that you might make money, but if it stops when you actually stop working, then you're doing it completely wrong. And that's something that you're not going to learn at school. And in this video, I'm going to break down the key difference between probably what you're learning now, probably what you're earning now, linear income versus residual income, and why this one shift can completely change your time, your freedom, and your financial future. All right, let's get started. Let's start off with the most common type of income, probably the one that you're actually earning now, and that is linear income. What is this? Well, you go out, you trade your time, you get paid. You trade your time for money. You show up, you get paid. If you don't show up, you don't get paid. Pretty simple to understand, right? Yet, that's exactly how most people earn their money. I don't care if you work at McDonald's making 10 bucks an hour or you're a surgeon making $1 million a year. All right. Let's take a successful dentist. Let's say making 300 grand a year. Sounds pretty good, right? Especially if you're right out of school, ready to start paying back all your loans and start making money. But here's where dental school, or here's where school in itself fails you, fails all of us. They forget to inform us that we're getting ready. They're setting us up to spend the next 30 to 40 years of our life. And if you're a dentist in a very physically demanding, because you're always hunched over in this position, mentally taxing profession, that, and get this, don't miss this part, every dollar is tied to procedures. Every dollar is tied to your production, patient flow, or if you're an attorney, something like that, your clients, that sort of thing. Every dollar is tied to that. You showing up and getting paid. Now, that dentist that makes $300,000 a year, if they take a week off, no production equals no collections. And guess what? That paycheck disappears. So that means that's the trap of the linear income. It's capped. There's only so many hours, so many weeks, so many months that you can work, right? There's only so many hours in a week that you can work. So it's capped and it's fragile. Why is it fragile? Because if you don't show up, you don't get paid. So it involves your time. And no matter, again, no matter how much you earn, it keeps you stuck. This linear trap, this linear income trap, no matter how much you earn, 10 bucks an hour, $1 million a year, it keeps you stuck in the trap, trading time for money over and over again. All right. Let's move on to something a little bit different. So let's move on to where I want you to start to think about shifting your life, shifting your income in what's called residual income. Residual income. This is income that continues to come in long after the work is done. All right. It's how the wealthy people get ahead while the linear folks stay trapped. Well, what are some examples? You can have cash flow. We'll just put here from rents, rental property, or real estate syndications. You can have royalties from if you have any type of digital products, if you make any type of online courses, if you write a physical book or an ebook, intellectual property, anything like that. Dividends from investments. Like you can look up and find dividend paying stocks. Or one of my favorite, along with real estate, is business income. Now, this is business income where other people are doing the day-to-day work for you. Linear income, and here's number 2, residual. What's the key difference? Well, the key difference in this one, you earn it and it does not involve your time like this one does. You invest your here to get residual income. You invest your time or your money once, and then the returns keep coming in over and over and over. And this isn't always passive from the start. You have to do the work. You have to, you gotta get it set up. But once it's set up, residual income works whether you're in the office, whether you're on vacation or sleeping on the couch. This shift from linear income to residual income is exactly what Robert Kiyosaki talks about in his book, Rich Dad, Poor Dad, where he talks about the cash flow quadrant. So if you've ever read Rich Dad, Poor Dad, you remember he talks about the four quadrants. Remember, you have E for employee, S for self-employed, B for business owner, and then I for investor. Now let's talk about where most high income earners live. They live in the S quadrant. Yeah, we all probably started off as an employee, but at some point we started our own business, we started our own practice, and we moved into the self-employment quadrant, which we think that that's it. That's like the golden standard. If we can own our own business or own our own practice, that's it. Yeah, we make great money here, but it involves us showing up. We have to use our own two hands. We have to show up. Okay. If the self-employed stop working, if their time goes away, then the money goes away too. No time equals no money. And the goal that Kiyosaki talks about is to get, and he actually calls this the poor side, and he calls this the rich side. The goal is to get from the poor side to the rich side. Okay, that's the shift that I want you to start thinking about, getting over to the business owner quadrant or the investor quadrant. This poor side is the linear income side, whereas the rich side is the residual income side. The residual income side, this is where this is where wealth is going to be built. You move from the person who works in the business, right, or in the practice, to the one that owns it. You own the system, you own the teams, or you own assets that work for you. You go from, on this side, you go from, I've said it before and I'll say it again, you move from the person who works in the business, okay, to owning systems, to owning teams or assets that work for you. You go from being an earner over here, I've said it before and I've said it again, to over here, owner. You go from the earner, you're earning income, to you owning businesses, you owning property, you owning things that make the income. It doesn't involve you. This involves you. And here's the thing, and this is the great thing about it. Once you understand that shift, it's very hard to unsee it now as you're moving forward, making your money. Now you may be thinking, well, Jeff, I already make good money. I already make six figures or seven figures or whatever. Why do I need to change anything? Because it doesn't matter about what you make. High income does not equal financial freedom. If your lifestyle depends on you being in the office every day, then your income owns you, not the other way around. What if you get injured? 10 years ago, I injured my hands, snow skiing. That was my wake up call to, I need to do something to get over this quadrant. What happens if you get injured like me? What happens if life takes some sort of unexpected turn? That's not freedom. That's just a higher paid version of the same linear trap. Okay. Residual income gives you options. It buys back your time, not just your lifestyle. So let's go back to our dentist example, the one that was making $300,000 a year. So imagine, instead of that person earning their money from the dental chair, that same dentist starts building just one new residual income stream a year. I'm not talking about going crazy. Just start with one. Maybe it's investing in a real estate syndication. Maybe it's they want to come up with a course for other dentists. Maybe they do something that other dentists don't do. Maybe they want to go and invest in a dividend paying stock. Okay. Anything that's going to start to help them build other sources of income that doesn't rely on their hands. And then guess what? After a few years, they're still practicing, but they've done one a year. And then maybe they start doing 2 a year. But now they look up, now they have multiple income streams working in the background. Eventually, for that person, work becomes a choice, not like what most of us experience, even when we get in our 40s, 50s, and sometimes 60s, no matter what we make, where work becomes a choice, not a necessity. People still need to be working if you're still on this side of the quadrant. That's the real goal. That's financial freedom. So here's the bottom line. If you're still only getting paid once for every hour you work, you're doing it wrong. Okay. You're the dentist. I remember the first time that I was explained, first time I asked this question to, it was a dentist making a lot of money. I said, how many times do you get paid for every hour you work? And he misunderstood the question. He said, well, it depends on the type of patient. And I said, well, what are you talking about? He said, well, you know, in that 1 hour, I can block off one large dental implant case where I'm taking out teeth and I'm doing bone grafting, I'm doing implants. I could do anywhere from 5, 10, maybe even up to $20,000 in production in that 1 hour. Or I could have maybe two smaller procedures where I'm working like on two patients, 30 minutes each. And I may be getting 2,000 or 5,000, maybe doing a root canal here or a crown there or whatever. So it really depends on the patients. And I said, you misunderstood me. I didn't say, what can you get paid in that 1 hour, whether it's $2,000 or 5,000 or $20,000. I said, how many times do you get paid every hour that you work? And he still didn't really get it. I said, all right, let's take that patient. Let's say you do $5,000 worth of dentistry on them. He said, okay. I said, when is that person going to come back? Maybe for a checkup or whatever. He said, a couple of weeks. Okay. You charge him $5,000, you do the work. He comes back 2 weeks later. Do you charge him $5,000? He kind of laughed, said, no, why would I do that? I did the work 2 weeks before. I said, so what you're telling me is you're only getting paid once for that $5,000 patient, right? Whatever you did in that hour. He said, yeah. Then he started to kind of get it. He said, oh, I see what you're saying. Yeah. And then he said, yes, I have to see patients, however many patients I can see or however much production I can get in that 1 hour. That's it. And that's where most people are. You are getting paid once for every hour you work. And then you have to work another hour to get paid. You can't go back and keep charging the patient or client again and again. Okay. And I understand. I know this may be frustrating. It was frustrating for me because it's like, man, we've worked so hard to get to this point with the education, time, energy, effort, the debt we had to go into for some of us to get to this income level where we are now. We're over here. We're probably here, but that's not the goal. That's not the end game. The end game is to make your money work for you, make your income work for you. Now, you don't need to completely overhaul your life overnight. All right. Just start with one residual income stream this year, just one. Pick one, whatever you want, whatever interests you. Then next year, if you still like that, whatever it is, let's say it's real estate, then you do it again. You build another, or maybe you do two, and then another and another. And slowly but surely, kind of like Dave Ramsey's debt snowball, you will be creating your own passive income snowball. It starts small. Remember, it's up on the hill. It starts small and it starts rolling down and it starts to build on each other. Now, if this information that I gave you today inspired you and you want to keep learning what to do, great. Check out this next video.